All right, what's going on, everybody? Ryan Ogren here, and today I'm going to be going through who the players of the data center industry are, what they actually do, and how they make money, because I think that piece allows people to understand this space a little bit better. And for those that don't know me, if you're new here, I'm Ryan Ogren. I'm a private equity investor in the data center infrastructure space, and just a few years ago, I didn't know the difference between a transformer and a substation. And then when you fast forward a couple years later, me and my team were in rooms where billion-dollar infrastructure projects are being decided and then announced. And we've had to learn this industry from the ground up as an outsider. I'm making these videos for two reasons. The first reason is I'm a young guy. At the time I'm recording this video, at least I believe I'm young, I'm 28. And there's not a lot of other 28-year-olds in this industry. The infrastructure that we're building right now is going to far exceed the guys that are actually building it. So it's actually us, my generation is going to be the generation that's actually taking care and operating the infrastructure that's being built right now. I think it's very important to do that, and there's not a lot of folks my age that are actually in this space. We're coming up on a massive bottleneck, and I'm going to start to chip away at it right now because we're going to need more young people in the data center infrastructure space. So that's number one. Number two, I know a lot of energy guys, a lot of midstream guys, a lot of power infrastructure guys, a lot of private equity investors, a lot of VCs, a lot of Wall Street guys, a lot of finance guys that want to get into this space and deploy capital or do deals or create opportunities, and they just don't know too much about it, and they're having to learn from these bits and pieces. I get asked all the time, do you have any resources on what we could go through to learn this stuff? And so I just decided I'm going to put together these videos because one, it's going to help you guys, it's going to educate the industry a little bit quicker, but two, we're going to get a little bit more deal flow from it. And we love deals, that's how we make our money. Without further ado, if you want to understand how this industry is working or how the industry is working from my perspective, or if you're building something and you find these videos useful, this channel is for you guys, so subscribe and let's get into it. So without further ado, let's get into today's video. All right, so today's video we're going to be going through the players in the data center industry. Who are they? And what do they do, and what to call them, and how do they make money, okay? There's quite a few different areas of the data center space, and it's not just one business or one company can handle all. These companies are massive companies, but the solutions required to get a full data center, like from raw land to active operational data center, it will oftentimes take multiple different major companies to get that deal done. It's a major infrastructure project, billions and billions of dollars, okay? And a lot of the industry is revolving around player one, which are the hyperscalers, okay? So it's very important to these guys, the hyperscalers or the cloud providers. Who they are, it's Amazon Web Services, AWS, Microsoft, that's how I pronounce it, Google Cloud, Meta, and then Oracle. These are the hyperscalers, okay? And so what they do, they build and operate massive data centers to run cloud services and AI. Okay, when you use ChatGPT, you're using Microsoft's data centers. When you stream on Prime Video, you're using AWS data. So they make money by selling compute, storage, and AI services to businesses and consumers. So AWS generates over $100 billion per year in revenue from these services alone. So hyperscalers, though, they typically own and operate their own data centers. They don't rent space from others, and they're the biggest players in the industry, and they're building more capacity than anybody else. So the hyperscalers are typically referred to as the end user. When you build a data center or you get a powered land solution together, you take raw land, you turn it to powered land, typically you're selling it to the hyperscalers because they're the ones that can write the biggest check. Why? Because they make the most money from the data center itself. Look at that, AWS, over $100 billion per year in revenue from this. So it's very important to understand the hyperscalers, what to call them, and who are they. And my experience with them, they are very good at educating younger people like myself. I've been on calls with the hyperscalers, and they've done a tremendous job taking me under their wing and just showing me and explaining the industry and what they're actually looking for. And I have no affiliation with them, so don't get me in trouble, anybody that's watching this. I've always had a really good experience with each one of them because they're very clear and they give you exactly what they're looking for because they don't have the bandwidth. And it's funny to say, these massive companies that are on the screen, they don't have the bandwidth. The teams that are at these companies, like the data center development team, the energy team, the power infrastructure team, they're very lean and efficient teams. They don't have massive companies, or they are massive companies, but they don't have massive teams to undertake these projects. So there's a tremendous amount of deal flow. Everybody and their mother was sending land in to these folks at some point in time, and they had to go and educate each person that was sending them land, and they did a tremendous job, and they are doing a tremendous job. This is just the start, and I'll go in a little bit more in depth of what I think and what I know that these hyperscalers are really looking for when it comes to land solution and their current needs. And obviously, this is just my perspective. These are my opinions. So if there's something weird or something seems off, or maybe some announcement came out after this video, just bear with me. Maybe drop me a comment and we can discuss it. That's the hyperscalers. And so player number 2 are the colos, also known as the colocation providers. People typically call them just the colos. And this is Equinix, Digital Realty, CyrusOne, QTS. These are the big ones. There's also other ones. Technically you could classify Aligned as one, I would say. But typically what they do is they build data centers and rent space to other companies. Okay, so think of them as landlords, but for servers. So you don't want to build your own data center. You just rent space in a colo. And this is realistically going to be a big option in the future because the infrastructure it costs, the CapEx of building a data center yourself is very expensive. So a lot of people are a lot of these startups are actually renting space in colos right now. So how they make money, they charge rent per rack, per kilowatt, or per square foot. And their typical rates, they obviously vary depending on demand, but this is what we've seen as typical rates. We're not experts in the actual operations of data centers, so I'll just say that. We just know that data centers make a lot of money. But anyways, 10 megawatt facility could generate 15 to 30 million per year in revenue. That just shows you some of the economics behind it. So these things they're actually money printers when they're operational. That's why the valuations here are so bananas. But yeah, their business model is very simple. They build once and then they rent out forever. It's a very strong business model. They do long-term contracts, 3 to 10 years, recurring revenue. This is a real estate business with very high margins. This is pretty much what the colos do. Interesting enough, a lot of people think they just run the servers. They do not. So they don't run the servers. They just provide the building, power, and cooling, and their customers bring their own equipment. You'll see this a lot when people are talking about racks and chips and all that stuff. So pretty cool. We love the colos. They've been very clear with us. We don't deal with them too much. A lot of times because they need a tenant. So for them to do a deal, they oftentimes want to have a tenant in tow who's going to actually rent this out or lease this space before they go into a deal. That's not always the case. Usually, if they can de-risk it for themselves, they certainly will, right? And usually, their favorite customers are these hyperscalers, right? The end users. But there's other companies as well that need data center space. So that's that. And if you guys have any questions at all, drop a comment below, and I'll be sure to come by and answer it. So player number 3 are the data center developers. So we just call them data center developers. A lot of developers have jumped into the data center space just because they know what to look for. So these are the data center developers that we would classify them as, and once again, these are my opinions, but Aligned Data Centers, DataBank, EdgeCore, and then Stream Data Centers. These are some big developers. Some other big ones, you could technically put QTS in there, but I still think of them as a colo. And you can intermingle these sometimes because some businesses, right, they're trying to expand services and add revenue channels. So some do some silos are right in the middle, some are doing some other things. Like there's some big data center developers that, like North Point up in the Northeast, they're another one. Yeah, I'm not going to name all these different names because they're not subscribers. But the data center developers, there's way more than this. They find land, they secure power, they get permits, and then they build the data centers. I don't think a lot of them won't build the data center depending on the scale, but if it's like 100 megawatts and lower, this definitely changes. If it's like a gigawatt plus, typically nobody's going to be building that out besides the end tenant or the colo. But we've actually seen Aligned do some big deals. And obviously CyrusOne and CyrusOne's up here. EdgeCore, Stream, like they've all done big deals. But they find land, secure power, get permits, build data centers, and then they either lease to hyperscalers or enterprises, or they sell to investors or REITs. Or number 3, they operate themselves. And so it's like a colo model, but just not necessarily co-locating the space. And so typically what we'll find with these developers is once they get powered land solutions, they will technically exit. A lot of them will hold on for a little bit. And you can break apart this market into a couple different segments because there's also the independent power producers, which are power generation developers as well. And so those guys just look for opportunities to deploy power generation and power plants and build power plants like on site or close to data center infrastructure. And so these data center developers, it breaks apart into multiple different categories. But pretty much all they're doing is they're really taking raw land, getting it into powered land, or they're getting a project to a place where it can actually be a data center. So if that's a brownfield, greenfield, powered shell, you name it. And I'll go through all these terms in another video on my channel. How they make money. Hyperscaler, let's say AWS says we need 200 megawatts in Virginia. The developer then goes and puts the whole deal together. I don't necessarily think that they would go ahead and build it and then sell it to AWS. They might get it close to that and then exit as soon as they get de-risks enough for AWS. Then, or they could actually build it. They could construct the entire data center. AWS could then sign a lease. Developer then collects rent or sells the asset at that point in time. So it's the same thing. You can see why I was saying like developers and colos fall together. The colos are really just major. And there's some operational differences, but I don't think that's necessary for the depth of this video. Then you also have option 2, which a developer builds a data center without a tenant, then markets it to potential customers, then leases and then sells it once complete. That's another option. And really, also these markets and these projects, I think there's certain thresholds that you also need to understand as far as power goes. The 0 to 10 megawatt range it can be a data center, but it can also be a coin farm. And it could also be HPC, it could also be AI. It could be a million different things. It could be just like data storage, it could be IT compute, it could be anything different. Like it could be really anything. 0 to 10 megawatts, 10 to 50 megawatts, like pretty similar. But then the Bitcoin starts to fall away and it really starts to shift towards HPC and AI. 100 megawatts and up in power and beyond, and these are rough numbers, it's pretty much AI. And there's obviously HPC as well that's big into the space. So these numbers could be a little bit off. And once again, this is just my opinion on how I see it. I know there's industry is very opinionated and there's people in the industry that know way more about this than me, but that's how I see it. So when you get up to 500 megawatts plus, that's a big deal. And that's usually when you're getting into that hyperscale level. Okay, so that's just a side note. The data center developers take on a lot of risk. So if they can't find a tenant or buyer, they're stuck with an expensive empty building or just like a plot of land that they probably paid way too much for and wasted a lot of time with. So that's that. And then player number 4, very important player. Very important player. These are the utilities, also known as the transmission operators, the TOs. But the electric utilities or power companies, these are just some big ones, but it's your local power company. It's the one that supplies power to your house. Duke Energy, Dominion, AEP, Georgia. These are big ones, just to name a few. Entergy is a big one. And the interesting thing about these utilities, and the technical term for them is transmission operator, the TOs, because that's what the grid operators call them. So there's the electrical utility, which is pretty much like last mile power, right? And they're also in charge of power outages and service in the area, and it's their power that's on the grid. But then the grid operator, and in some areas, if I'm just trying to think, like for instance, in the Northeast, where I'm from, Philadelphia, Pennsylvania, you have PPL is the transmission operator in that area, and then you also have PJM as the grid operator, okay? And so PPL for this instance is electric utility, right? And they're also called the transmission operator. PJM is the grid operator. And so in some areas, the actual transmission operator is also the grid operator. So it's not an actual difference. In other areas, there is a grid operator and then a transmission operator, okay? And usually the transmission operator, those are stakeholders in the actual grid operator. So it's like a weird little thing, but the reason I'm touching on that is because there's a lot of important pieces around connecting to the grid and getting power from the grid for these data centers. And these electric utilities play a significant role, and it's very important. If you're doing a project and you're not talking to the electrical utility, I think your project is not going to have the legs, because you need these guys. Every customer, every data center site, they want front of the meter power. I'll do another video on this, I promise. Okay, so at the time of this video, the industry changes fast, so we could definitely change this. But what they do, they generate and deliver electricity to data centers. 100 megawatt data center uses as much power, 75,000 homes. So utilities have to build new power plant, substation, transmission lines to support the demand. Oftentimes they'll build the cost, and oftentimes they'll pass the cost back to the data center or the end user through a PPA, and they'll just make the bill. So it'll be just amortized over their PPA, the power purchase agreement. So how they make money, they sell electricity. And these typical rates, they could be a little different depending on what the PPA looks like and the demand in that particular area. These are just rough numbers to show you how much money's in this space. But you could see here, like a 100 megawatt data center, if we just take these numbers, $70 million per year in revenue for that particular data center. So the utilities are making money, okay? They're making a lot of money. So data centers are the utility's favorite customer, as you see here, and that's why they put these numbers up here. They use massive amounts of power. They pay on time because they're massive companies, and they sign long-term contracts. It's one of the best businesses to be in to date, right? People say we're in like the attention economy. We're still not. One of my favorites of all time, his name's Alex Hermoz. He's got a good YouTube channel. He's got like 3 million subscribers. He always says we're in an attention economy, but I'm telling you, the billion-dollar plays are still in energy infrastructure, and you can see this right here with the utilities. So the current issue, though, is utilities can't build the infrastructure fast enough to meet demand. So the grid interconnection wait times right now are literally 4+ years. And so what a grid interconnection is, it's literally, if you just look outside and you see a power line, it's pretty much you being able to connect to that power line. That's what a grid interconnection is to your site. And oftentimes these big parcels of land that these AI data centers are being built on, these hyperscale ones, they don't have a grid interconnection. You have to go through this grid interconnection process. And right now, like the cat's out of the bag, the interconnection wait time's 4+ years at this point in time. This is a huge hurdle for people wanting to get into the space. This actually prevents a lot of deals from happening. And I have a lot of thoughts around this and how we've navigated it. And this is probably our secret sauce. And I think as soon as I reveal our secret sauce, we'll probably get a ton of deal flow from it. So maybe I'll do that in another video. But player 5 are the midstream energy companies. So these are midstream companies and pipeline operators. Think Williams, Kinder Morgan, Tallgrass, TC, and there's way more, right? And a lot of these big super major energy companies, Shell, Chevron, Exxon, like they own a lot of pipeline infrastructure as well, but these are like the main ones. So Williams is an absolute monster, not in a bad way, not in a good way. They're just very big in the pipeline space. So they build, all these guys, they build and operate natural gas pipelines. Most data centers are powered by natural gas plants, or they have some kind of gas powered to them. Maybe it's redundancy, maybe it's through there's gas, combined cycle gas power plant going through the grid. There is a big demand for midstream companies and gas that comes from the midstream asset, because every single data center site will most likely need gas at some point in time for the redundancy purposes, or just bridging power, or that's how their main power source is going to be. So you need these pipelines to be able to deliver fuel to these plants. So being able to have a really sick midstream connection or a relationship to actually go and say, hey, do you have capacity on this pipeline? Can you get a pipeline to the site? Having good midstream guys makes that process very easily, and it's a superpower. So this is where our company has had a lot of success in the midstream space. These guys, they make a lot of money because they transport natural gas through their pipelines, and they charge a fee per unit of gas that they move. They're literally just a middleman. They stay in the middle. Gas comes through, and they just charge a fee to carry the gas, and then it's not even their gas, right? They also build gas-fired power plants next to data centers too. That's what Williams has started to do. So they're building these power generations because think about it, they know where all the capacity is, they know where their infrastructure is, they know where the data centers are, and the data centers are coming to them saying, hey, we need you to get gas to this site and we need power. I haven't seen a midstream company build the data centers themselves yet. I don't think they will. The infrastructure build out for a data center is bananas. So I think it's $20 million per megawatt right now. So it's pretty crazy. If you do a gigawatt site, that's $2 billion to build it. And it could be way, way more than that. Wait, that's 20 billion, excuse me. So that's a lot of money for just building a data center. But we're seeing a lot more midstream companies do some power generation. And here's the examples. Williams is building a 5 gigawatt gas-fired generation for data centers. Tallgrass is involved in a joint venture that's doing this. I see the point here, but key point, midstream companies are becoming power companies, and they are starting to trickle into data center deals in some way, shape, or form, because there's just so much money in this. But they control the fuel, the generation, and sometimes the real estate. And having a good midstream component to your team, or a good midstream connection, is a superpower, because being able to get gas to your site is like the first step of being able to do some on-site generation or just redundancy. Getting firm gas is important, and there's firm gas and then there's interruptible. And firm gas means they could be like on a pipeline. You could have a pipeline going through your site, and if there's interruptible gas in that pipeline, that means that they could turn it off anytime that they want. If there's firm gas, that means you're always going to have it, right? So that's that. And then player 6, engineering and construction firms. These are the EPC contractors, so engineering, procurement, and construction. There's a ton of these out there, and actually a lot of them engage with my content, and for good reason. There's a legitimate need for these companies, but the big boys are typically taking the lion's share of this work because it's so expensive, it's so intense. So you really see Turner Construction handling a lot of this stuff. Kiewit is another one. You see them handling a lot of this. DPR, Mortensen, Ecom. I wouldn't necessarily say that Kiewit's like a EPC, but these are the big ones. And you also see smaller companies that do the EPC work of procuring like power gen equipment. And that's one of the things that we've had to get good at like on the side for our deals, is making sure that we can find power gen equipment to use in our particular deals. What they do, they design and actually build the data center. So let's say a hyperscaler comes in and buys the land. So let's just take a deal, right? We got raw land, data center developer comes in, all the infrastructure looks good, data center developer buys it, and then they go to a midstream company and they're like, hey, can we get gas to the site? Midstream company starts to work and says, hey, the offtake's going to look like this. We can do it. Here's how much gas we can get. Cool. Data center developer now has to go to the grid and the utility and say, hey, I want to get a grid interconnection. Give me this amount of power. Utility does their studies, their load studies, all this stuff, that and the other. And they have the gas already there for backup, or if they wanted to do some on-site generation. So now the process is starting. The utility does the load study, the system impact study. They get their grid interconnection. Obviously, I'm fast forwarding like years down the road. And so now they have a site that's going to be energized. And a lot of people don't realize that the utility at this point in time, once they say, hey, we'll give you this amount of power, you're going to need to upgrade this around the site. So you have the cost of the upgrades is going to be this to actually handle this amount of power on the infrastructure side. So when you have that amount of cost, a lot of deals fall through there because they didn't expect to be hit with a $20 million upgrade on these power lines and everything right around there. So it depends on the actual utility, how they do it. But then let's say the developer handles that, and now they have a grid interconnection and they have a load ramp and they want to sell it. This is when a hyperscaler or a colo could actually buy it, and pretty quickly. Okay, so this is how all these pieces come together, and then they buy it, and then these EPCs come in with the hyperscalers, are typically going to be their customers. The hyperscalers usually aren't building it themselves, in my experience. They'll use these guys to build them. Turner Construction being a big one. So that's how like those pieces fit together that I explained so far. And these guys obviously charge a fee for construction services. And these companies don't really take ownership risk, but they do take a lot of risk because they'll do actual construction all over the country. So they'll move their entire team out there. They'll put up all the money to actually get this thing rocking. They have to deal with cash flow, like a crazy amount of cash flow. It's bananas when you see these major projects. Really tip of the cap to these guys. They're studs. And they're the ones building the backbone of the future of America, which is crazy talk. So I really love dealing with the construction guys. And also the EPCs and like the engineering firms. They're some of the funniest and the best and the brightest people out there. I've never really come across a guy that's been mean because they're nerdy dudes to begin with, and they love what they do. And they really love bringing projects to life. I'm just thinking of our head engineer, and he's awesome. I love dealing with these guys. Never really had a problem with them. And so player 7 that's big are these equipment manufacturers. We call them OEMs, original equipment manufacturers. And you can look at it from like a server and IT perspective, like NVIDIA or server-wise, Dell, HPE. Power and cooling from like Vertiv or Schneider Electric or Caterpillar Kohler from the generator side, or electrical infrastructure like ABB, Siemens. But another one that's not on here is power generation equipment. So like GE, Siemens, Cummins, just the big ones. Cat, I guess that's like Caterpillar. That's a lot of them. And these OEMs, Baker Hughes, Pratt & Whitney, these are the big ones. And I'm just trying to think. Rolls-Royce had a turbine industry for a while. Siemens bought them. But anyways, all of these guys are the OEMs. And the reason they're important is they manufacture the equipment that goes inside the data centers or inside the infrastructure that is needed to generate power. And this industry has gotten hit with so many bottlenecks. These OEMs are trying to ramp up manufacturing. They're trying to ramp up their teams. They just don't have enough skilled labor. They don't have enough training force to actually train their teams, or capacity-wise to ramp capacities. They're the ones manufacturing the equipment. And when you're doing a $20 billion build-out, you want to use brand new equipment that's from the OEM that actually gives you a manufacturer's warranty. So a lot of these guys, they'll actually buy these slots. And what we've noticed, or they'll go directly to them, and they really don't want to deal too much in the secondary market, but there is a massive secondary market for these natural gas turbines and gensets and all. And so it's a very crazy space to be in. We've had to deal with it and dealt with it so much, and we learned a lot about it, and we have some processes around it. I'll do a video on it. But a lot of times these OEMs are saying that the lead times on these turbines and power gen equipment are like 3 to 5 years out. So it's like kind of bananas when you look at it like that. And it makes sense. One of the craziest spaces right now, and that's actually pretty fun to play in as an investor, is buying manufacturing slots. So sometimes because of the grid interconnection issue, a lot of projects get canceled. Projects start, big time developers in there. They own the site. They get the utility started. The utility gives a deadline. The utility misses the deadline. The developer took a risk and bought the actual manufacturing slots and bought the units from the OEM. And then the utility said, we cannot get the power to the site at this time frame. The they still have their turbines, but the tenant walks away because they missed the deadline. So then the developer has these slots, and they're going to have to come up with the rest of the deposit, but they don't have a tenant, so they'll scramble. But then the project goes bust, and then so they will cancel, and they'll cancel the order, but the manufacturer is still going to make those particular units. So what we've seen is they'll sell the rights to that manufacturing slot, which is awesome. So they'll come to someone like us, they'll come to private equity firms, they'll go to other hyperscalers, they'll do everything, and they'll say, hey, we have some slots available, do you want them? And it's just like up for grabs because it's brand new equipment that just hasn't been made yet, and oftentimes you can bump up in line as you go. So this stuff's really cool. These OEMs, they sell equipment to developers, operators, hyperscalers. Oftentimes they have distributors that they're working through. Oftentimes they could be just working directly. Yeah, equipment manufacturers are seeing massive demand right now. It's pretty bananas. They just can't scale production fast enough. I had a story from a friend about, I can't say the name of the big company, one of the majors, and a project got, and he was telling me that one power plant, there's literally, or not one power plant, one manufacturing plant makes 10 of these units per year. That's all they can do. It's just one unit, or one plant can do 10 per year, and that's it. All 10 units for that particular year were going to go to this one project, and it got canceled. So that entire plant's production was getting canceled, and they were trying to ramp that plant to have a shift where workers are working during the day and a shift that comes in and workers are working at night, just to double the speed. But they can't train. They haven't been able to have the time to train the other team, because then they have to take guys away and spend 3 or 4 weeks during work hours to train the team. They're not going to be able to train the team at night. So it's been, because then you're going to have your main workforce train them at night. So it's been a really challenging thing for them to actually ramp up. So that's that. And then you got these investors, these outside investors and REITs, but I'm not going to touch too much about them. This is an AI document I put together, so we're not going to go too much into it. But big private equity firms that are operating in the space, Blackstone, Brookfield, KKR, BlackRock's in the space, pretty much every, Macquarie's in the space, pretty much every major private equity firm is doing deals in the AI infrastructure data center space. And they just buy data centers as investment. They buy power generation assets. They buy power infrastructure assets. They're doing insane stuff, pretty cool stuff, just dropping as much money as they possibly can. And they're going to be controlling a lot of the wealth in the world after the dust settles here. So they make money from buying data centers, improving operations. And oftentimes we're seeing a lot of these private equity firms actually hold. So they're not selling at a higher valuation, seeing them hold right now. So that's that. But those are the 8 players, really. And once again, when we talk about the actual developers, there's the independent power producers, which are left out. And these guys literally are just plopping down power plants. And we like the guys that are the independent power producers that we really like. And we're not endorsing anybody, but they're normally the combined cycle power plant guys. They'll do a combined cycle power plant. We just connect them with a midstream company and they do their thing. A couple examples would be, I would classify NRG as one, LS Power, CPV. Those are a couple independent power producers that I would say are those. These are the 8 players, and each player makes money different, but they all depend on each other. So understanding who they are and how they profit is a key to understanding this industry, and that's how we see it. There's so much more that goes into a full end project than you might think, and a lot of landowners out there, a lot of farmers, a lot of folks that have a lot of land that don't know the space too well, they think that just because they have their land, they could just go sell it to a Meta or an AWS or a Microsoft, and then they're going to go put together this whole deal. And in my experience, they're not doing that just because of the sheer amount of legwork it's going to take to get a deal across the lines. That's that. And then one other hyperscaler I think wasn't mentioned. Let me see. Yeah, Google's in there. There you go. So that's what I got. Hope you guys enjoyed this video. And if you did, subscribe. I'm going to have more videos coming out very soon. And yeah, without further ado, Ryan Ogren, and see you in the next video.